Rock Financial has helped Credit Plug subscribers fund over $2.9 million. Rock Financial is the leading business financing marketplace. Get up to $125,000 with just a 620 plus FICO score.
95% of the products that we're going to actually close on, there will be no hard credit pull involved at all.
What's going on, YouTube? Welcome to the Credit Plug channel. For today, we have a special guest. We have Tony Cimino from Rock Financial. Welcome to the channel, Tony. Pleasure to have you back. In today's video, we're going to be going over some of the latest information in terms of business financing. So for those who aren't familiar, we've done a couple videos with you guys already, but for a lot of the new subscribers, can you just give an overview? What is Rock Financial? What do you guys do?
Yeah, Antoine, as you know, the Credit Plug rocks, right? Like we've done this in the past, but just a quick overview of Rock Financial. We're a commercial financing broker in the alternative financing space, right? So what that means is there are banks and lenders out there that do a lot of unique things for business owners. We operate almost as a liaison between business owners and those banks and lenders, right? To be able to make sure that there's a streamlined process for business owners who are looking to get financing options for their business. And there's a variety of products out there, and it's not easy to navigate. So our experience and knowledge of the process really allows business owners to stay focused on their business while taking advantage of some of these options that are out there for them.
I mean, there's definitely a ton of information out there. And so I wanted you to kind of elaborate, especially for, let's say newer business owners who may not know where to go in terms of getting a business loan. Let's say, you just started your business and, you may not have as much revenue coming in. What are some of the business funding options out there for newer business? And then what would some of those minimum requirements be in terms of revenue or even credit score and other data points?
No, this is an awesome question, right? Because if you look at some of this data that's come out over the past couple of years in almost this post-pandemic world that we're in, right? More businesses have been created in the past couple of years than certainly the few years prior to that. So we're seeing a lot of these newer business applications come through, and there is a little bit of information lapse in there because they're new businesses, right? They don't necessarily know just yet where to be looking. And one of the major things that we point out is something that you do very well, and that's business credit, right? I don't need to go into that because they can watch the channel for that, but that's a major thing that we start to talk about in these early conversations with new business owners, because it is a one-up on the process, especially as you start to establish more and more. The best thing that I could tell a business owner is you are going to want to crawl, walk, run through this process. And what I mean by that is you're going to have to develop a relationship. Business owners, what you should know is the most risky part of a bank's portfolio is small business, right? So when they're working those deals for you, they're already looking at you waiting to say, how do we decline them, right? You have to check off every single box in order for them to say, here's your approval. Well, most of the time, especially new businesses, they're operating at a loss, or maybe they're not making very much revenue, or the credit score took a hit because they are getting off the ground. So what they need to know is they should be flexible when it comes to those options that might be available, because it may be more of like a starter offer between $5,000, $10,000, $15,000 that's going to allow them to develop a relationship with a lender. Right. And that $5,000, $10,000, $15,000 time and time again, I've seen grow to $25,000, $55,000, $75,000. We have business owners today that literally are taking $250,000+ that started out with $5,000 to $10,000 from us. Right. And that's because they've been able to take advantage of opportunity, solve challenges, but utilize the capital in a way to continue to grow the business, right? And that's probably the best way that I could describe it, is crawl, walk, run with these relationships you're going to look to put in place, whether it's with Rock Financial or anybody else out there.
Yeah, no, I mean, that's a great point, because I think there is some misconception in terms of like expectations, especially as a newer business. So I wanted to piggyback into the next question. In terms of alternative financing, which is the space that Rock Financial is in, versus conventional financing, right? The major banks. What are some advantages of alternative financing versus conventional financing, especially for less established businesses?
It's a great point. So just one of the biggest things that kind of make those really different arms is really just understanding what each of them is trying to do, right? The traditional arm is looking to help established businesses stay in the community, right? So they'll do things like 25-year commercial mortgages where you can purchase your building, and there's a lot of information that's going to need to be exchanged in order to show that, financial statements and this and that. There's a lot that goes into those longer transactions that may get you nice long terms on a loan where you can purchase a building or something like that, right? But as far as like a newer business goes, really where it starts to separate is the secured versus unsecured lending, right? So what I mean by that is there are products out there that will specifically look at a business specifically for its revenue. And this is where those younger businesses, those business owners with not such great credit, I want you to listen up a little bit, because this is where you can do the most damage, is in that unsecured lending world. There's lines of credit, there's term loans, there's cash advance. There's a lot of different products in there for business owners. And basically some of the minimum requirements are going to be much different than traditional lending. Traditional lending wants to see great credit. So you're talking 680, 700 plus credit. Whereas alternative finance, they may not even have a minimum credit score. 500 plus is usually a good place to start. 550 plus is even better, right? The more qualified a borrower you are, obviously the better terms you are going to see. And that's probably the best point that I could give. But yes, you're super flexible in that alternative market. So they're going to look specifically at the revenue and the cash flow in your business. They're not going to look at things like industry, right? One of the biggest things that will get a business declined right now is industry. Restaurants, they're not viewed very great by banks right now, considering that in the pandemic, they were 50% or 25% a capacity. You couldn't serve people in your restaurant, right? That hinders what banks are going to do these days. And lenders are going to do these days. So because of that, some of the things that traditional lenders may view you as, hey, taboo, or we're not going to touch that at all. Alternative lenders actually love that, right? So a restaurant is super transactional. You can see the money flow through the business.
Exactly.
So the alternative lenders, they're going to look at things a little differently. They're going to specifically look at that cash flow, that revenue in the business, and utilize that number to determine, okay, what can this business afford? And are we willing to extend that to this type of business, right? The time in business is going to be a big one, right? For traditional lending, you're looking at like 2 or 3 years plus. You have to show tax returns to prove that time in business. So, that's typically the requirement there. On alternative side, you're looking at 3 months time in business. Even just documentation is a major difference, right? If you're somebody who hasn't gotten to the point where you're keeping financials on the business, you can't go the traditional route because they want to see financials, right? So if you don't have financials in your business and haven't kept financials in your business, you're going to have to go the alternative route. So there's a lot of different reasons why a business owner may find themselves going alternative, but just know that there's really not as much of a difference between alternative and traditional as you may think. The savvy business owner is going to use both where it makes sense.
Absolutely. And I always make that point too. There is a trade-off, right? Alternative and conventional. Obviously with conventional, you might get better terms, lower rates, things like that. However, you do have to meet higher prerequisites in order to qualify for that. So for newer businesses, the alternative route might be a more viable option. Now, in terms of the specific types of financing products, how would you envision, let's say, a newer business is starting out? What types of products would they qualify for in terms of, let's say, merchant cash advances, business loans, business lines of credit, equipment financing? What would be probably like if we're starting at the bottom in terms of like lowest minimum requirements going up? What would that look like in terms of credit products?
So the real way that we look at these things, to be honest, is the need of the business.
The need, right?
That's going to actually establish what route makes the most sense. Because, for example, equipment financing, right? Equipment financing is one of the biggest untapped resources that's out there, and we utilize it all the time for newer and very established businesses. And a lot of times we can even pair that with some sort of working capital solution as well. Like you mentioned, term loans, lines of credit, business loans, or even cash advances, right? You can pair those things together where now a business owner has access to some liquidity and the piece of equipment they needed, right? So that it really comes down to the need of the business, right? So just to answer your question more directly, yes, there is certainly a recipe for success. The most flexible products are going to be your cash advance style products. There's no minimum FICO credit score. They're working with businesses as little as 3 months time in business. There's even some smaller loan programs out there that'll go down to $4,000, $5,000, $10,000, right? So that's pretty much the smallest products that are available. Then you start to get into a little bit more traditional styles. There's some lines of credit and term loans and business loan products that will start at like $10, $15, or $20,000. And those are going to be for businesses, again, who can afford to have that little bit more liquidity or cash out on the, on the business, right? So you do have to have a little bit more, like you had mentioned, the prerequisites, right? So you do have to have a little bit more in terms of that. Sometimes it's a 6-month minimum, sometimes it's a 12-month, depending on industry or credit score, right? The one thing that I will tell you is it's a moving target, right? So if your credit score is 600 versus somebody with a 500 credit score, you are going to have different options, right? So the best thing that I could tell you is bringing somebody like us in is a major advantage to you, because we understand whether you got a 475, 575, 675, or 775 credit score. We have a bucket for you to be in and also reviewing, right? And that's what's unique about Rock Financial is we can help you do the shopping, right? And everybody, I'm the same way. I'm a big shopper. I grew up, constantly in the mall, right? Like, I love to shop. I'll shop for anybody. We can go shopping if you like, but I totally get that mentality.
Right.
Of, listen, like I don't really want to put all my eggs in one basket. I may mix and match brands, and that's what we do, right? Like I want people to know that's what Rock does, right? Like I said before, we'll give you an equipment loan and a term loan or a line of credit if that's what makes the most sense, or an SBA loan, and there's AR lines, there's factoring, there's a lot of products on the platform, as you know, but we do what makes sense for the situation, for the business owner, and really just try to give them the path of least resistance so that they can continue to run their business.
So if a business is interested in, working with Rock Financial, what does the process look like from submitting an application all the way through loan funding? And what are some type of documentations and data points that a borrower would expect to submit?
So it's a streamlined process, and you actually make it super easy. They could click this link below and go directly to
right below.
Directly to a landing page, and that landing page is going to capture some basic information. Once that information hits our system, you're going to be assigned a person on our team, a business finance advisor, who's going to work with you hand in hand from open to close, right? So I just want to stress that you have somebody that you can lean on and ask questions of, who's going to represent you in underwriting to give you the best chance at not only approval, but also funding, right? So sometimes people neglect the fact that, approvals are great, but you want to actually get the money in your account. So we want to make sure that, we're dotting I's and crossing T's from the very, very beginning. And that's what that one dedicated point of contact does for you. So I just want to hit that point home. But at the same time, it's going to also prompt you to start the application process. And in that, you're going to need to provide the last 3 months of your business bank statements and Rock application, which is digital. You can upload it directly, directly to, there's emails that are going to go out, there's text messages, you can get the information into our system very, very easily. It's going to prompt you to do so. And when you share that information, instantaneously, it's going to hit our processing team, where they're going to review all of your information, pull all of that data into our system. And then, just so everybody really understands where Rock creates a major advantage, it's right here in the process, right? So we are very, very technology driven. We work with all of our lenders directly, and we have APIs into their system. So when we pull information into our system, it's going to identify, hey, these are what makes the most sense. It's now going to ping your dedicated point of contact and say, hey, double check this. Does this make sense, right? Because we don't always trust the system. Sometimes the human override is what makes the major difference. But yes, we have systems in place that are going to identify the right places for you to apply to, and we're going to get those decisions back within minutes. Typically, we say it's between 12 and 24 hours for an approval, but I've seen them, decisions come in as quickly as an hour or two, and business owners receive funding as quickly as same day. I don't want to say that happens for everybody, right? So just a typical timeline so everybody understands is when you complete that application process of 3 months of bank statements and a signed application, you're looking at about 12 to 24 hours for an initial approval, and anywhere between 3 and 5 business days for closing is a safe bet. If you need to move quickly, though, we can move as quickly as the borrower needs. And I stress that a lot because, again, it's Friday. It's getting late here on the East Coast, right? When we're filming this,
right?
What I want you to know is if you had to meet payroll for this week, there's a certain possibility that you could do that. There are products on the platform that would allow you to meet that need today, and that's what's unique about us is we can move as fast as the borrower needs us to do so.
Excellent. And I have to ask this question before we wrap up, because I know this is something that a lot of our subscribers want to ask. When you're going through the initial process, is there a hard inquiry? And if so, what bureau is being used?
That's a great question. So there are certain products that will require a hard credit pull. For example, the SBA is going to pull your credit for funding, right? Now, when you apply with Rock Financial, 99% of the lending we do is outside of the SBA. So I want to give you that piece of information. You're going to have a soft pull done on your credit. We are going to do a soft pull of your Experian credit, and that is not going to affect your credit score. In fact, 95% of the products that we're going to actually close on, there will be no hard credit pull involved at all. And if there is, we're always upfront about that. And again, we understand the times that we're in, so we would never want somebody to be going down a path where that could be an option. The one thing I will say is just know the more traditional styles of financing, for example, like the SBA or any conventional type of loan, you should know there's going to be a hard credit pull involved. So if you go to Chase, if you go to Wells Fargo, they're going to pull your credit. So you should know that. But if you go to Rock Financial, we're going to pull it, but it's going to be soft.
Absolutely. Excellent. Well, I definitely appreciate you coming on and, dropping some gems for our audience. If anyone is interested in applying for business financing with Rock Financial, there's a link in the description of the video. So definitely go check them out. Again, it's been a pleasure, Tony, and definitely we'll have you guys on again. But until next time, take it easy and we'll talk to you soon.
Thanks so much for having us on. And as we always say, everybody keep rocking.
Absolutely. It's The Rock.
Yes, sir.
All right. Have a good one, man.